Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City. Now, there are some obvious differences here that I've been at pains to point out compared to the Chicago contract. Notably, the pullback up in early July from the December 2020 today uptrend, currently at 603 even. That was below the long moving average, currently at 637. However, there were in recent days quite a few similarities here with the Chicago contract. There was a bullish halfway hesitation, though a singular one, during the pullback up with an initial target X in the 713 area and a secondary target X1 in the 742 area. Both have been achieved, unlike the ones in Chicago, where only one was, and these ones now unretired. We also had the same monthly key reversal up in July as in Chicago, and this is key. The upper time, currently 761 even, of the late March to early July shallow bullish shift pitchfork. This has capped the recent market, much as the version we'd seen in Chicago, and caused a breakout lower, out from a recent July-based bullish rising wedge pattern. This was especially noteworthy for the lower trend line, as this had also been the mid-July today uptrend. Anyway, we had target X2 below in the 697 area. This was for the wedge pattern, and was especially interesting because that is where we also have, I should say, the 50% absolute Fibonacci line, and a little below the 50% Fibonacci line of the big old 2011-2019 move at 692. With yesterday's move below target X2 and the attendant support, well, that now makes them resistances overhead. Meanwhile, further down, we are now testing the odd combination of the rising short-medium moving average, currently 682, and the lower tine of the bullish Andrews pitchfork, currently at 679, and also the middle tine of the bullish shift pitchfork, currently 677. If that wasn't enough, just below is the slowly rising medium moving average, currently at 670 even. What that means is obvious, that we are being held up by some good support. Yet what it also means is that if we break that support, then we'll likely have nothing in between there and a move down to the very slowly rising long moving average, currently at 637. And if that goes, well, then we may likely have a look at the previously mentioned December 2020 today uptrend and the possibility of a very large double top formed since March. So watch this space. Minneapolis wheat. I continue to admire this contract, really admire this contract, and with some unabated passion, as it has been and still is a series of brilliant pieces of technical action. I've repeated the same mantra now, well, for months. Yet there are a number of, let's be honest, quite a few huge differences here in this contract compared to Chicago and the Kansas City contracts. For starters, and perhaps supremely important, the August to December 2020 bullish Andrews pitchfork, remember that one, which has run this market higher so successfully, was and is still valid. But you'll have to allow for some aberrations. The key feature over this summer has been how the market has punched up and down over and under the fantastic upper tine, currently at 953. During that time, prices moved higher, and when it looked like they might fail, well, those very same actions also allowed me to draw a more acute April to May bullish Andrews pitchfork. Now, this second one had grown like a branch out of the first one. Then 3 weeks ago, we found the lower tine of this new Andrews pitchfork crossing up over the upper tine of the old Andrews pitchfork. And there's the rub, because this conflict stopped the market's rise for a second time, and prices have pitched lower ever since. Thus, the newer bullish and more acute Andrews pitchfork is no longer viable, and I will retire it by my next commentary. So where are we now? Well, the curling lower of prices has seen prices start to accelerate their drop down through the rising short-medium moving average, currently at 883, and yesterday's closing below the middle tine of the original bullish Andrews pitchfork, currently 879. Today, we've slowly tried lower, down below the 2017 high at 868. The amount of ammunition we now have overhead would reasonably suggest a further decline may happen, as we seem to have little in the way until the rising medium moving average, currently at 824. And to be honest, I don't even think that is such a strong support as may be supposed. I'd suggest looking at the rising lower time, currently at 805, as a possibly stronger support. After all, if that is broken, then we will have to look at a whole new set of circumstances in a world without this quite long-lived August to December 2020 bullish Andrews pitchfork. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.